Good morning, everyone. Thank you very much for joining us today. My name is Quentin Burry. I'm the membership manager at the Franco-Thai Chamber of Commerce. On behalf of the FTCC and our SME committee, I would like to warmly welcome you to our second episode of Practical Series Doing Business in Thailand. This series was created to provide practical and reliable insight for entrepreneurs, startup, SMEs that are operating in Thailand or are planning to enter the Thai market. So in today's episode, we will focus on accounting, tax, and financial compliance. We are very pleased to welcome two experts today from Forvis Mazars. We will guide us through this topic today. So we'll have Mr. David Louis, Director of Accounting Services at Forvis Mazars, and Kun Narong Prayunlat, who is the Head of Payroll Outsourcing. I would like to also mention that this webinar is being recorded and will be uploaded to the FTCC YouTube channel. So therefore, I would like to invite you to follow our YouTube channel to be able to access the future episode. And also before we begin, just a quick reminder that this episode will be about 1 hour, and we will keep Q&A for the end of this session. So without further delay, I would like to let the floor to Kun Narong and David.
Thank you very much. Hopefully you can see my screen.
Yes, all good, all good.
All good, fabulous. All right, well, thank you very much for having us this morning, and thank you very much for joining us. As Quinton mentioned, my name's David, and my name's David, and I've got my colleague Narong with me. So Narong and myself are both within the outsourcing team at Forvis Mazars in Thailand. And what that means, so outsourcing is predominantly accounting outsourcing and payroll outsourcing. So Narong here leads the payroll outsourcing. So I'll just leave Narong to introduce himself quickly. So as I said, my name's David. So I've been in Thailand for about 7 years now with Forvis Mazars. Previous to Thailand, about 10 years in Singapore, and then born, raised and educated in Melbourne, Australia, where I was qualified as a chartered accountant. So I'll let Narong or Berm introduce himself.
Okay. Good morning, everyone. So it is a great honor to me to be here and to speak with the member of the Franco-Thai Chamber of Commerce together with David. So I have experience in HR and payroll more than 20 years, and especially for Forvis Mazars. I have been with Forvis Mazars for about 18 years already. During this time, I have had an opportunity to share practical payroll and employment insights with many organizations. So I sincerely hope that today's session will be useful and relevant for all of you.
Fabulous. So why don't we just kick off with a little bit about us. So some of you may have heard of Mazars being a French firm. About 2 years ago, there was a merger with a US firm called Forvis, so now known as Forvis Mazars. And if we look at ourselves sort of in the APAC region, we're quite well represented in the APAC region, in about 15 countries and 30 odd offices. In Thailand in particular, there's about 400 odd employees at Forvis Mazars Thailand with 15 partners. We've got 2 offices. So our main office is in Bangkok at Empire Tower, Chongnonsi. We've opened a satellite office recently in Chiang Mai. So we've got about 15 odd people in Chiang Mai. So that's quite interesting for us and a new space for us. So I understand there have been other webinars previously, so I'm not going to go too much into the details of, for example, setting up in Thailand. But what I did want to focus on in the next sort of 20 odd minutes on the accounting side, look, what we'll look at is really looking at businesses wanting to come into Thailand, or somebody who's new to Thailand, or somebody that doesn't have too much understanding of the regulations in Thailand. So very much sort of a basic beginner sort of overview. But yeah, probably a good place to start for the audience. So look, the way that we've set up today, Narong and I have thought, well, what are some of the key questions that we get asked often? And we just thought we would do it almost as a question and answer, and run through some of those key questions, and share some of those answers with you. So the first one is, look, is it necessary to set up a legal entity to conduct business in Thailand? Generally, the answer is yes. Due to the tax risk and ease of doing business. And for foreign investors, look, you can incorporate a limited liability company. The other two options is a branch office, and the other one is a rep office. Just bear in mind, for a rep office is typically really for marketing purposes. So the rep office cannot generate income, and it only has cost. Okay. Whereas a limited liability company, you can obviously have revenue and expenses, as well as a branch, you can have revenue and expenses as well. A branch is generally a branch of another entity, and that other entity would be based abroad. So, for example, it could be of XYZ company in France, and then you have a Thai branch. Another common example we would see is maybe it would be a branch of a regional office. So that could be a branch of a XYZ company based in Singapore, a branch company of XYZ company from Hong Kong. Okay. So the next question is, a foreign company is eligible to receive subsidiaries or incentives? Look, the answer is yes. And the most popular one is the BOI, otherwise known as the Board of Investments. And the Board of Investment promotion is very much dependent on, I guess, the type of business that you're looking at doing. And then the different incentives will be shaped for particular businesses. Typically, what we see is there are tax incentives and non-tax incentives. Some of the tax incentives may be, some sort of tax holiday, although that's being reduced quite significantly at the moment. There could be some sort of reduction in say your stamp duties or import duties. But for the non-tax incentives, what we see is work permits and visas. And obviously the big one is the ability to buy land. Okay, so the pros and cons of setting up a company in Thailand. Look, I think the pros are, look, strategically located, big population, some government incentives, good cost of living. But obviously we look at the cons, and there are some barriers. I mean, language and cultural barriers are obviously the first one that come to mind. You've also got the difficulty of doing business in Thailand. Like if you're new to Thailand, a lot of these things that you would hear about just don't make sense. And it's very hard to question these things. Ultimately, it's how things are done in Thailand. So there needs to be a cultural acceptance of these kinds of things. You've got foreign ownership restrictions. So obviously you've got the 51%, 49 or 51% Thai shareholder, 49% foreign owner. So you've got those kinds of restrictions. The BOI will obviously get you around those restrictions, and you can have 100% ownership under the BOI. And the last point, look, I think, especially in the last couple of weeks or in the last couple of years, political instability, you can't say that's just Thailand. That is something, yes, very directly to Thailand. But if you also look at what's happening more recently in the world and what's making news headlines, I think that's an issue around the world. Let's just move on to a little bit more specifics regarding tax, and I'll give you some of the high level numbers on tax rates, which I think people are generally interested in. So corporate income tax is a flat rate of 20% of net profit. So later on, I'm going to talk about the SMEs. So just bear with me for a moment. Just in terms of personal income tax rate, so that's on a progressive scale, but the top rate is 35%. Okay, we have VAT, which currently is at 7%. So VAT first came into Thailand and it was meant to be 10%. But year after year, we've had a reduction and it's held at 7%. So around sort of October, November, we generally have seen notification from the revenue department saying, okay, for the next year, we're going to hold it at X%. So that's been held at 7% for quite some time now. And then, yeah, we've got VAT, we've got withholding tax and stamp duty, which can create quite a lot of burden. So later on, I'll talk a little bit more about the VAT and the withholding tax because there is a monthly submission that needs to be submitted. Okay, just in terms of corporate income tax, I mean, how often do you need to prepare your corporate income tax return? So you actually need to prepare it twice a year. Okay, so you have a half year corporate income tax return, and let's just say your year end is 31 December, your financial year end is 31 December. You would need to submit your half year return by the end of August. Okay, so your half year return is essentially a guidance of where you will be at year end. So given that you're submitting that half year return in August, you've roughly got around 7 months of actual information. So you've got your January through to your let's call it July of actual information. Okay, and then you essentially need to be forecasting your last 4 months or your August through to December, last 5 months, sorry. And you need to be quite accurate there. So you need to be within about 20%. Okay, and then at year end, you obviously need to complete your audit, and I'll discuss that later. And then after your audit, you need to complete your annual corporate income tax return based on your audited figures, and that's due roughly around May the following year. So while I've just mentioned a 31 December year end, in Thailand, you can actually pick when your year end is. So when you're incorporating, you can decide on when you want to have your year end. So for example, a lot of Australian companies, they will pick a 30 June year end because that aligns perfectly with the year end in Australia. But more often than not, we do see a 31 December year end. So something to note, when you're doing your first year, you actually cannot exceed 12 months. So for example, I know in other countries, your first year could be 12 to 18 months. But in Thailand, your first financial year cannot exceed the 12 months. So what we would sometimes see, for example, if you're incorporating we're in March now, but let's, for example, say you incorporated your business in October and you want a 31 December year end. Because you have incorporated in October and you've got a 31 December year end, you would actually need to prepare the accounts for 2 months to have a 31 December year end. Your only other option would then, for example, if you created the entity or incorporated the entity as at the 1st of October, your other option could potentially be any period within 12 months from there. So for example, 30 September would be your 12 months, okay? So you've got 2 options. You could basically have a 30 September year end, or you could stick to your 31 December, but that just means your first year will just occupy 2 months, okay? So look, I think a lot of you may be SMEs, and you may be wondering, are there any benefits to SMEs or are there lower tax rates for SMEs? The short answer is yes, there are progressive tax rates for SMEs. And basically your first 300,000 baht of net profit is at 0% tax. Anything above 300,001 baht to 3 million baht is taxed at 15%. So if we compare that to the flat corporate income tax rate of 20%, there are benefits there and tax savings. And only when you go above 3,000,001 baht do you then incur 20% income tax from there on. Okay. But to qualify as an SME, there are two items that you must pass. Okay. So you must have paid up capital at the end of the year, not exceeding, so no more than 5 million in paid up capital. Okay. That's the first thing. The second, revenue must not exceed 30 million for the year. So you need to make sure you qualify for both of those. Moving on, so VAT, what are the VAT obligations in Thailand? So in Thailand, you have a minimum threshold of VAT, which is 1.8 million baht. So not a huge number, okay? After you exceed 1.8 million baht, it becomes compulsory to register for VAT. So if you believe that you're going to incorporate in Thailand and for example, your first year of operations while you're setting up and scaling up will not exceed 1.8 million of revenue, then you actually don't need to register for VAT. Registering for VAT, even if you have no sales, will trigger a monthly submission of VAT to the Revenue Department. Okay. So if you are not registered to VAT, you obviously don't need to do those monthly submissions. But if you are registered, you will then be required to do the monthly submission for VAT. So that calculation is quite basic. So it's basically the output tax or the VAT on sales minus the input tax, so the VAT on purchases. So one benefit of actually registering for VAT early, even if you do not meet the minimum threshold, so you can by option register still, you can then claim the input tax. So you could then claim the VAT on purchases. Okay. In Thailand, we've got some information on a tax invoice. So for example, I know in a lot of other countries, you may, for example, go and buy something and you would just get a receipt straight away. In Thailand, we'd call that a commercial receipt and not necessarily a tax invoice. Okay. So there are requirements for your tax invoice. And let me just run through them with you briefly. So the tax invoice, it has to say tax invoice on it. It needs the name, address, and taxpayer's ID number of the VAT registrant on the tax invoice, the name and address of the purchaser of the goods or service, serial numbers of tax invoices. It needs a description, a quantity and the value of the goods. The amount of VAT needs to be calculated, the date of issuance, the wording, either head office or branch on it. So yeah, there is quite a lot that needs to be requested on the tax invoice. So even if you were to set up in Thailand, you would need to ensure that the tax invoice that you would give to your customers would need to be compliant. And then that way your customers can also claim on the input tax. Okay. So invoices raised in currencies other than Thai baht require the presentation in both currencies. But actually, when you perform your VAT submission at the end of the month to the Revenue Department, that's actually done in Thai baht. Okay. For services, generally an invoice is issued after the payment has been made. So you would be given a commercial invoice, you would pay the commercial invoice, and after payment of the commercial invoice, you would then receive the tax invoice. So the next one is withholding tax. And when I first came to Thailand, it was quite difficult to get my head around this one. So typical when you're living abroad, we think withholding tax is, you know, if you're paying a dividend abroad, if you're paying interest abroad, if you're paying royalties abroad. And that's still true. But in Thailand, we also have a domestic withholding tax that we need to abide by. And that domestic withholding tax is only, so it's on services, things like rent, royalties, dividends, interest, advertising fees, transportation costs. So for example, if you were to use services from a lawyer or a professional service firm would withhold, well, you would withhold 3% of the invoiced amount, and then you would pay 97%. Likewise, if you were renting an office or a shop front, for example, you would withhold 5%. And then that 5% would then go to the revenue department. Okay. So whenever you withhold an amount to your supplier, you then have to provide what we call is a withholding tax certificate. And then that withholding tax certificate is used by that supplier or from yourself at the end of the following month to then prepare the withholding tax return. Okay, so on a monthly basis, you need to do the withholding tax return to the revenue department, and you also need to do the VAT return to the revenue department. So quite a lot of tax compliance in Thailand. Okay, so obviously with a rep office, a representative office, there's no VAT for a representative office, so you will not need to do this you will not need to submit VAT for a rep office, but you do need to submit withholding tax for a rep office. Let's just push on to accounting for now. Okay, is it necessary for an audit? And who's responsible? It is necessary for an audit for all entities. Okay, so whether you have a company limited, whether you have a branch office, whether you have a rep office, whether you're a not-for-profit, it's mandatory, and there's no exceptions that you need to have an audit. Okay, the directors have the legal responsibility, and your accountant should take ownership of preparing the accounts. So in Thailand, we actually need what we call is a Thai registered accountant. And the Thai registered accountant is somebody who prepares your accounts and signs off your accounts to say that they've prepared it. And then on top of that, your auditor will obviously audit the accounts and then would sign off and provide you an opinion as well. Okay, so I mentioned earlier on about the year end. So, you know, whether it's a 31 December, whether it's 31 March or 30 June, the key here is you can't go more than 12 months. Okay. So we have two types of accounting methods in Thailand. I would say most companies are applying what we call is TFRS for MPAE. So that's a simplified version of financial statements, and that means a lot less disclosures or notes to financials. Generally, TFRS, which is consistent with IFRS, is used by listed companies in Thailand. Okay, so one of the questions that we receive a lot, if the company has subsidiaries, is consolidation mandatory? And only if you use TFRS is it mandatory. Otherwise, TFRS for MPAE, it's not required. Okay. I think one of the last questions before we move on to payroll, what are some of the common challenges faced during the audit year-end process and how can they be mitigated? So auditors often perform exhaustive substantive testing. So they will ask you for a lot of information. They will want to see a lot of invoices, and they would try and tick off as many of those invoices as possible. Okay. Do not expect reliance on internal controls because a lot of the local audit firms will not rely or will not test them. Okay. Prepare extensive documentation requests. You will be asked for a lot of documents. Anticipate challenges in judgment areas like intangible assets, impairments, share-based payments, inventories, and low materiality levels. And I think the low materiality levels leads to more substantive testing, which is what I mentioned at the beginning. Because of those low levels, the auditor wants to get comfort over the numbers as much as possible. So then they end up asking you for more information. Okay, so that's a bit of a basic overview of accounting, and I'll just hand over to my colleague Narong to run through as well.
Okay. So thank you, David. So we move on to the payroll. Let me start with a simple but important question: why payroll really matter? So I often see many companies, especially smaller organizations or local businesses, they're treating payroll as a routine administrative task. Tax and Social Security may be deducted without proper reference to the law. So when payroll is handled carelessly, it is usually a sign that the other area, for example, employee benefit or compliance with labor protection laws, are also being neglected. So this can lead to high employee turnover, workplace dispute, legal claim, and some case, court proceeding and financial penalties. So move on to the next question. What are the mandatory employer registration? So once an entity is established in Thailand, there are several key registration that employer must complete. So first is the revenue department. Employer are required to calculate, withhold, and remit personal income tax on the monthly basis, and also submit on the annual basis as well. Second, employer must register a company with Social Security fund and pay workmen compensation fund within 30 days from the start date of the first employee. And Social Security provide a coverage for the many benefits, include medical, but workmen compensation fund will cover the work-related injuries. In recent years, authorities have taken more time to review a new registration to ensure that companies are genuine operating entity in Thailand. This process can take several weeks, so employer should prepare document well and submit the document at the earliest as possible. So the third is the employee welfare fund. Actually, its enforcement has been postponed from October last year to October this year. Initially, it will apply to a company with 10 employees or more. Employees who are not members of the provident fund must join this employee welfare fund on a mandatory basis. Forvis Mazars will be organizing a dedicated practical webinar on this topic this year in August. So please follow our Forvis Mazars channel and stay tuned with us. So last thing here is work rules and regulation. So although legally require only the employer with 10 or more employees prepare the work rule and regulation, but I strongly believe that clear work rules are essential for all organizations as they set expectation and align workplace practice with the Thai labor law. Move on to the next question. So when you hire employee, so how employee number change obligation? So many employer may start business with a smaller numbers of employees at the beginning, and then they grow with hiring more people, more 10 people, or even 100 people in the future, right? So there will be more reporting obligation apply, but these are often overlooked. So let's walk through here. If employer have 10 or more employee, it's not only PND1, which is a monthly withholding tax, not only social security contribution that company will have to prepare and submit, but if you have more than 10 employees, employer must prepare and display work rules and regulation as said before, and also submit the annual working condition form we call form call law 11 at every January. And if you have more than 50 employees, employer must establish a welfare committee. And for a certain industry, they need to implement workplace safety management system as well. If they have more than 100 employees, employer must comply with disabled employment requirement and also arrange skill development training. So move on to the next question. So what is the minimum wage, overtime, and allowances in Thailand? So Thailand's minimum wage vary by province. As of the latest announcement in last July, daily minimum wage range from 337 to 400 baht. For the overtime pay, overtime is divided by the several categories. Overtime on normal working days will be paid at 1.5 times the hourly wage. Working on public holiday will be paid at 1 times the hourly rate, the hourly wage for the monthly employees, and 2 times for daily employees. And overtime on public holiday or weekend will be paid at 3 times the hourly wage for all employees. Importantly, that overtime must be requested by the employer and agreed to by the employees. Proper documentation should be retained for inspection purpose as well. A common list here is a calculation of hourly wage. Overtime is not calculated based on only basic salary alone, but also include other payment that qualify as wage. So for example, fixed monthly allowance like transportation or telephone allowance, it is treated as wage as well. Move on to the next question. What is the statutory benefit for the leave entitlement? Okay, let me go back a little bit to the previous question. So I need to give you some highlight about the taxable income, because in Thailand, almost cash and non-cash benefit provided by the employer are considered taxable income. However, there are a certain exemption applied under Section 42 of the Revenue Code and relevant ministerial regulation. So, for example, group medical insurance provided through a licensed Thai insurer may be tax exempt. But if employer purchase health insurance for an employee, it is taxable. This is just for the information about taxable in Thailand. Okay, so move on to this question. What are the statutory benefit and leave entitlement? So in Thailand, Social Security is mandatory for all employees in Thailand. Employer and employees each contribute at 5% of wage. Again, wage is not only basic salary alone. A minimum wage based of a minimum wage base of 1,650 and a current maximum is 17,500. So this ceiling wage will gradually increase to 23,000 by 2032. Next is employee welfare fund. So employee welfare fund contribution rate will start at 0.25% of wage. So wage is not only basic salary, and for employee welfare fund, there is no wage ceiling, and it will increase to 0.5% in 2031. So regarding the statutory leave type, so in Thailand we have a number of statutory leave, but I will pick up some statutory leave to explain in this session. So first of all, the employer must provide at least 13 public holidays per year, including Labor Day. And employer must provide a minimum 6 days of annual leave after 1 year of service. Regarding sick leave, employee actually can take by actual, but employer can pay up to 30 days a year. Regarding maternity leave, so it has been increased to 120 days, and the employer will pay up to 60 days. And only female employees, they are entitled to another 15 days of leave to care of a serious ill child. A medical certificate is required, and the leave is compensated by the employer at 50% of normal wage only. It's good news for male employees. We have paternity leave, so 15 days with fully paid, and the male employee must take it within 90 days of the childbirth. And the last leave that I pick up here is a minimum 3 days of personal business leave. This is a fully paid 3 days that employer must provide to the employee. Okay, let's move on to the next question. What are the personal income tax compliance? So in Thailand, employer must withhold and remit personal income tax by 15 of the following month when filing electronically. Thailand applies a progressive tax rate with a maximum rate of 35%. Employees may claim various tax reductions such as insurance premium, investment in mutual fund, family allowance, or a certain government promoted incentive. So the latest one is the expense incurred for the purchase and installation of the solar cell rooftop system. So it is effective from now until 2028. Okay, let's move on to next question. When a new employee join or an employee leave, what authorities does employer needs to notify? Okay, so now we have covered the general compliance requirements such as employer registration and mandatory filing. So when employer hire new employees or when employees resign, the employer is required to notify the Social Security Office. So for new hire, the registration must be complete within 30 days from the employee's start date. And in case of termination or resignation, the employer must submit the deregistration by the 15th of the following month. In addition, if employer is registered with the Employees Welfare Fund or Provident Fund, the employers must also notify the relevant fund of the employee entry or exit as well. Okay, next is the when hiring foreign employees. There are several critical requirements that must not be overlooked. Yes, so when we need to hire foreign employee, we need to first focus that a valid work permit must be obtained before employees can commence work in Thailand. And once the work permit is issued, the employees must apply for a Thai tax identification number with the revenue department without delay. So the employer can correctly withhold and report their personal income tax on time. Another important consideration is a minimum income requirement required for the foreign employees. So the foreign employees remuneration must not be lower than a minimum salary prescribed by their nationality. However, for employer operating under BOI promotion, the minimum income requirement for the foreign employees is determined by the job position instead of the nationality. Okay. Next is what payment are required upon the termination. Okay. So this is a last slide for payroll. So now we hire employee and then we need to know when we have to terminate the employee, because this area is I often see that employer may overlook. Okay, so when we need to terminate the employees, in a general principle, employer must give advance notice of the termination either before or on the employees' regular payday, with the termination taking effect on the next payday. This is often misunderstood by many employers, because many employers understood that they will just give 30 days notice, which is always incorrect under the Thai labor law. And if the employer does not wish the employee to continue working during the notice period, this is permitted that employer can provide a payment in lieu of notice up to the next payroll date to the employee instead. And in addition, employers are required to pay statutory severance, which depends on the employee's length of service. So employee, maybe you may have heard that generally employer will set a probation period for the employee at 4 months. That is a reason on behind this, because the severance pay under the labor law in Thailand will start once employee complete work at 120 days. So if employee work 120 days or more, employee must pay severance. So this is why many employer may set probation period less than 4 months. Okay, so severance pay in Thailand will start from 120 days to more than 20 years of working. So if employees work with more than 20 years, the severance pay is equal to 400 days of the last wage. And again, wage is not only basic salary. Another area that employer often overlook is a payment for unused annual leave. So upon termination, the employer may need to pay unused vacation to the employee as well. This is particularly important in the employment termination case, where employer must not only pay annual leave balance, but they have to include a proportion of the annual leave entitlement accrued in the current year as well. Okay, so the last question here is about the retirement age rule. Okay, so if an employer does not specify a retirement age, or if the retirement age is set above 60, an employee who notifies the employer of their intention to leave upon reaching 60 years old of age will be deemed as retirement in every case. In such situation, the employer is required to pay statutory supplement based on the employee's length of service as well. However, it is important to note that supplement pay received in case of retirement or end of employment contract does not qualify for the personal income tax exemption of up to equivalent of 400 days of final wage capped at 6,000 Thai baht, because this tax exemption apply only to the a contract termination or the termination of employment only, which is we discussed earlier. Yeah. So I think this is all for the payroll presentation. Okay.
Excellent. Well, thank you very much for joining us. If you have the time to take a short survey just to get some feedback, that would be great. Or if you have any questions, you can also reach us. So thank you very much to the FTCC for having Narong and I.
Well, thank you very much, David, and thank you, Kun Narong. I really appreciate your presentation and the way you already replied to a lot of questions actually in your presentation. I see in the chat there is a question from Kun Nantawan. The tax exemption is only retirement or including every severance paid?
Exemptions is applied to only employment termination case for retirement or end of contract or voluntary resign. Is not applied to the tax exemption club.
All right. Do we have other questions? All right, so we are now coming to the end of this webinar. I would like to warmly thank our speaker from Forvis Mazars, David and Kun Narong, for their time today and for sharing very detailed information with us. Thank you as well, all of you, for joining today. We hope this session has been helpful for your business activities. As a reminder, the recording of this presentation will be on the FTCC YouTube channel. Please feel free to follow us on YouTube. And as well, I would like to encourage you to follow the Forvis Mazars Thai channel, because I understood there will be future webinar related to finance. And thank you again, and see you to the next webinar. Thank you.